Here's a CNBC challenge for you. Watch CNBC for 1 hour and take a shot every time you hear a bullish opinion or a bearish opinion about anything, and you will be 100% completely drunk by the end of the 1 hour. Do not do this. CNBC interviews so many bulls and bears about every investment or stock market or the crypto market or gold that there would probably be less than 1 hour of real content each day if CNBC didn't just interview these people who thought they were right about which way it was going to go. But here's the thing, we're long-term investors, and if you're focusing on being right, you're doing it wrong. You shouldn't want to be right. You should want to be rich. That's the point. So in this video, I'm going to take a look at what's wrong with being right and what your strategy should be as a long-term investor to be successful and grow your wealth over time. When I say you shouldn't listen to these people, I'm not saying that you shouldn't find ways to learn from others. What I'm saying is that you shouldn't focus on whether or not a stock or an asset is going to go up or down. The biggest problem with all these bulls and bears is that they're not consistently right. Yes, they might be right once in a while, but they're not consistently right. So if you follow their logic, chances are they're not going to get you where you want to go, which is to be able to retire. So here are some of my rules about who I choose to follow and learn from and who I choose to ignore when it comes to how to invest for the long term. Rule number 1, never trust children in the markets. And this has very little to do with how old you are. If you haven't been in the market since before 2011 and preferably before 2008, then you are a newbie to the market. And the reason for this is that you haven't seen a real significant downturn of any kind. There's been no bear market since the great financial crisis resolved itself in 2009 and 2010. So you don't know how to trade right now. If you look at some of these YouTubers like Meet Kevin, who's actually really brilliant when it comes to real estate, he just started investing in the stock market in 2020 at the bottom of the pandemic sell-off. For those of you who don't know, this is the most unheard of bull market that we've seen since the bottom of 2020 sell-off all the way to about mid-2021. And there's an old stock market adage that works right for this. Never confuse brains with a bull market. In other words, during that time period, you could have thrown your money pretty much anywhere at the stock market and been able to make a profit. Not only did Meet Kevin try to establish himself as a stock professional, he actually created a course and charged people for it. This is a guy who makes more money from YouTube than he does from his investments or real estate. You should never trust somebody that new. I've been in the market since 1998, and even then, you'll notice that over and over again in every single one of my videos, I tell you, don't be right. You're in this to build wealth. You're in this for long-term investing. You're not in this to be right. And if you're watching Jeremy from Financial Education or you're watching Meet Kevin, you're not getting the right information. They are constantly trying to be right, and more importantly, and dangerously for you, they're trying to push you into their investing clubs. You should never want to follow somebody just to get their tips on what stock to buy or what stock to sell. You should be following people to develop techniques. You want to be able to do this for yourself. What happens if Meet Kevin gets hit by a bus or Financial Education's Jeremy has a heart attack and suddenly your source for investing is gone? If you haven't put in effort developing your own techniques over that time, then you're screwed. You've got no way of knowing what to buy and what to sell. This is not how you should be learning how to invest for the long term. When you watch my videos, even when I'm talking about an individual asset or a specific ETF, I'm showing you my personal approach to how I analyze this asset. It's perfectly okay for you to completely disagree and not follow anything I do. Once again, I'm not in this to be right. My second rule is you should never trust rich people. You'll see lots of rich people come out on CNBC and give their views, both bullish and bearish, about where they think the stock market's going to go. Now, intuitively, it seems to make sense. These guys and gals got rich somehow, right? So obviously they might know something about which way the market's going to go. But here's the problem. If they're wrong, they're still rich. If you listen to them and they're wrong, you can't retire. So if you've got somebody like Harry Dent saying that the market's going to sell off 40% and you're fully subscribing to his views, refusing to invest until it drops 40% and it never does, you can't retire. Harry Dent's going to be fine. He doesn't make his living from investing. He makes his living from doing these kinds of shows and from writing books about how the stock market's going to crash. You need to know your source. If this person made their bucks from a different kind of industry, or worse, if they inherited it, then they actually have no advice to give you, and you should not listen to them about which way the market or the asset's going to go. For my third rule, investing is not a religion, and that might sound like it makes perfect sense to you, but if you pay attention to people who have views on gold or Bitcoin or even the markets, you'll hear what sounds like zealotry. It's okay to get very excited about an investment, but the only way that you're going to be able to protect yourself in the long run is by diversifying among different asset classes. If the asset that you're talking about, whether it's gold or Bitcoin or God help you, Dogecoin, isn't performing the way it's supposed to be, you shouldn't be developing a thesis for why it's going to turn around. You should be reevaluating whether you should be in it at all. And this is coming from me. I have holdings both in cryptocurrency and the precious metals markets, but I'm not sitting here like a religious zealot saying they are the next coming. Sure, gold and Bitcoin might outperform into the future, which is why I want exposure to them, but there's no point in putting it all in on the line and then risking everything. Once again, this isn't about being right. This is about being able to retire, and in order to do that, you have to grow your wealth over time. You can't afford to be wrong. Rule number 4. No one cares about your money as much as you do. Now, this might sound like a brain-dead rule, but it's totally true, and this is why I don't use financial advisors for my own investing. Sure, there are some perfectly good financial advisors out there that might be able to get you to your retirement, but none of them are going to care about your money as much as you do. And this applies to anyone that you follow on YouTube or CNBC. Most of these people either are so rich that it doesn't matter if their portfolio goes up or down, or they're investment firm managers where they're managing somebody else's money. If they are wrong and their investment firm goes to zero, they just shut it down and open a new one. My best advice for anybody who's learning how to invest for the long term is to hit up a lot of different sources. Don't just subscribe to one person and think that their word is gospel, and that includes me. And as always, I never try to be right. I have a plan for each direction. What am I going to do if the market goes up tomorrow? And what am I going to do if the market goes down tomorrow? To learn more about long-term investing, check out some of my other videos here. Thank you for watching, and I'll see you in the next video.